Good morning, traders, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today I'll be joined by my colleague, Prudence Macmillan. Hi, Prudence.
Hi, Rufus. How are you?
I'm doing well. How are things
Okay.
on your side?
Okay, from this side, everything is okay. And we are here to share some insights.
Awesome. So to everyone listening, I told you guys that from this week we'll have two extra presenters who will have more quality and in-depth research in presentations. So today we're introducing Prudence Macmillan from all the way from Tanzania, Dar es Salaam. So he'll be handling and helping out with the market snapshots. And if you have any questions, especially if you enjoy your content in Swahili, then this will be very interesting for you. So let's get started on today's topic. Trump tariffs ignite a global trade war. So we have been talking about the 2nd of April or Liberation Day, and this was the day that Trump was planning on implementing tariffs on all trading partners in the US, and that was done last night. So the Liberation Day is behind us. What we are left is a very confused market, a lot of volatility on the dollar index, a lot of volatility on gold, volatility on global equity indices, as well as currency pairs. So if you experienced this last night, you know that we already talked about this. And today we'll be digging deeper to see how much of an effect we should be expecting in the markets. So from the current chart, the one you're looking at right now, I'm trying to zoom. Just give me a sec. So here is quite a number of updates from last night's updates. So Trump launches tariffs, saying global trade has looted, pillaged, raped, and plundered the US economy. So he unveiled that 4% tariffs on China's imports, and that was on top of the earlier 20%. So now the tariffs on China is 54%. And also he presented 20% tariffs on the Eurozone. So fresh Trump tariffs begin on the 5th of April, that is tomorrow, and the 9th of April. So China says it firmly opposes new tariffs, vows countermeasures. France and the EU to reciprocate Trump tariffs this month. So there has been like minute by minute updates on the key developments. This is from France 24. So we'll go through each one of them, try to understand what's the overall impact of these tariffs. So Olaf Scholz says tariffs will harm the US economy even without European response. Then Bangladesh manufacturer says US tariffs is a massive blow to their textile industry. Then you look at Greece condemns US tariffs, says they don't last. French PM says tariffs are catastrophe for Europe and the US. Israel to come up with necessary steps in response to US tariffs. So the funny thing about Israel is that a day before yesterday, Israel had announced that they had removed all tariffs on US goods, but then they were expecting that Trump would not apply tariffs to them. However, in response, they basically implemented 17% tariffs on Israel, which caught Israel by surprise. So we're also seeing volatility in Israel stocks. So China urges US to correct wrongdoing over reciprocal tariffs. And I believe this is the main thing that a lot of investors are focusing on, because China is the second biggest economy after the US and also the biggest trading partner with the US. Majority of the goods consumed in the US comes from China. And now with over 54% tariffs, now we are looking at a potential retaliation from China, which could boil or rile the markets. So China's foreign ministry on Thursday urged the United States to correct its wrongdoing after it announced sweeping reciprocal tariffs on trading partners, including an additional 4% levies on Chinese imports. The US imposition of additional tariffs on China and other countries severely violated the World Trade Organization rules and harmed rule-based international trading regime, Ministry spokesperson Guo Jiakun told a regular press conference. China urges the US to resolve trade and economic disputes with it and other countries via consultation in the matter of equality, respect, and reciprocity. So UK are most worried about its auto sector, business minister says. We know that Trump yesterday slapped 25% tariffs on all automobile imports. So if you are in a country that or company that sells cars to the US, then you are faced with a big challenge of 25% tariffs. So Europe has everything it needs to make it through the storm, EU chief says. This was after Trump implemented 20% tariffs on member states. However, EU citizens are experiencing bubbling frustration because their leaders are still calling the US an ally, despite its naked aggression. And France 24 Brussels correspondent David Keating responded to that. So many are angry for what they see as overcaution from EU leaders. So UK says in relatively better position than EU on tariffs. German economy minister says EU unity is crucial in US tariff response. EU to tax online services after Trump tariffs announcement, France says. So we know that the US is a big tech giant, having been host to some of the top tech companies in the world. These include companies like Microsoft, Apple, Amazon, Nvidia. We also have other software companies like Oracle. So all these, they have been providing services to the Eurozone and extracting out of value from the countries in the EU. So now that they have been hit with 20% tariffs from Trump, they are looking to retaliate where it hits most. And in this case, they are targeting companies that provide online services. So the European Union is ready for a trade war with the United States and plans to attack online services in response to US President Trump's announcement, French government spokeswoman Sophie Prima said on Thursday. So we are pretty sure that we are indeed going to have an adverse effect on production, Prima told broadcaster RTL, expressing particular concern about the impact of wines and spirits. So France and EU to reciprocate Trump's tariff this month. France, working along with EU, is likely to issue reciprocal responses to US President Donald Trump tariff measures initially in mid-April and then again in late April, said France government spokeswoman. There are two responses that are expected. The first one will be around mid-April, based around his first attacks on aluminum and steel. Then a second one will likely at the end of April on the broader range of products and services. So economics have been flabbergasted at how White House calculated the tariffs. So while all along Trump has been saying that the tariffs will be based on how much you charge us. So if a country is charging VAT, for instance, Kenya charges a VAT of 16% on American products. Now we were faced with 10% tariffs from the US. This doesn't match what Trump had promised. So instead, they used a very funny formula, and this was basically the trade deficit between a country and the US, or basically exports minus imports. So when you divide that with the country's exports and you multiply by 100, you get a percentage, and that percentage would be divided by 2, and that would be the effective tariff that Trump passed on each and every nation in the world. So the only two nations that were not affected is Russia and South Korea, and mainly because they are already under sanctions from the US. So Norway seeks to negotiate with the US over tariffs, Prime Minister says. Swiss business group says US tariffs are harmful and unjustified. Macron to hold meeting with sectors impacted by Trump's tariffs. Taiwan says US tariffs are unreasonable. Trump's 25% tariffs on imported autos take effect. So in this case, we know that the tariffs on all autos that go into the US are already in effect. So in this case, the auto sectors is already experiencing volatility in the markets. So EU to prepare countermeasures to US reciprocal tariffs. I believe this has been repeated so many times on this update. EU's von der Leyen says consequences of tariffs will be dire for millions. South Korea's acting president calls for talks with the US over tariffs. So a good number of countries have conceded to Trump, and they are ready for talks. And this ranges from Canada to Mexico to South Korea and many other countries who don't want to get into a fight with Trump. They want to negotiate and find a middle ground where the tariffs are not implemented for long. So Thailand will negotiate with the US on tariffs, and Thailand had one of the highest tariffs slapped on them. China says it firmly opposes new US tariffs and vows countermeasures. Europe riled but plans cool-headed response to Trump's tariffs. So Hong Kong stocks fall more than 2% on Trump tariffs. So in symbolic rebuke, US Senate votes to block Trump tariffs on Canada. So this was a very interesting development yesterday. So a handful of Senate Republicans broke ranks with US President Donald Trump on Wednesday, joining Democrats to pass a measure that would block his tariffs on Canadian imports. The resolution, supported by 4 Republicans and all of the chamber's Democrats, has virtually no chance of becoming law. But it marks a rare albeit symbolic defeat for Trump on Capitol Hill, where his Republican Party controls both chambers, and he has seen little pushback to his ramping first months in office. So the Senate voted 51-48 to overturn the national emergency at the border, which Trump declared earlier this year, which he used to justify sundering Canadian imports with 25% tariffs. So German auto industry says US tariffs will only create losers. So of course we know that Germany has been hit hard because they export out of their cars to the US. So of course they have to negotiate and find a way out. So financial markets stumbled after Trump tariff announcement. Global financial markets were rocked on Wednesday by Trump announcement of sweeping tariffs targeting China and EU in particular. Trump laid out new measures after Wall Street stock market had closed, but his announcement has still ripped through the markets that were open at the time, sending stock futures and bond yields lower, while gold surged to a new record high. As the evening progressed, US futures fell sharply, and the Dow Jones dropping 2.4%, the Nasdaq plunging 4.2%, and the broader futures index for the SP 500 dropping 3.5%. Wall Street has largely suffered from Trump's various trade announcements in recent weeks. The share price of technology companies whose components are produced abroad fell sharply, with Apple losing 7.4% after hours, Nvidia falling 5.2%, and Taiwan Semiconductor Company declining 5.9%. Futures markets are typically much more volatile than the regular indices. The clothing sector was also hit especially hard, with a particularly heavy bill for China, where products will be hit by an additional duty of 34% from April 9, and Vietnam, where the new reciprocal tariffs rate will be at 46%. So brands whose clothes are partly made in China or Vietnam were sharply lower, with Gap down 8.5% after hours, La Flame falling 7.3%, and Nike losing 7.1%. So these updates continue forever because it has been minute-by-minute updates since the speech at 11 p.m. last night. So I'll not be going through all of them, but just to show you the highlights of how this had an impact in the markets. So Tokyo's Nikkei index opened 3.4% down on Trump tariffs. So clearly a big sell-off on the Tokyo stock market index. Australian blue chip stock index dips nearly 2% after Trump tariff announcement. So in this case, we are seeing even Japan, Australia being impacted by the Liberation Day tariffs. So today we are seeing some form of calmness, but we could be seeing more reactions as we get into the further into the London session and eventually into the New York session. So the Japanese yen strengthened by 1% against the US dollar on Trump's tariffs. So this was quite expected. The yen is taken as a safe haven currency. So when you see the dollar dumping, investors tend to go for the JPY compared to other currencies across board. So US wine industry reader says tariffs will hurt sellers. Of course, that was pretty much expected. And also there was a fair warning from Treasury Secretary Scott Bessent of the US, where he told Fox News that one of the purposes of the tariffs is setting the stage for long-term economic growth. So with our gigantic government spending, it was unsustainable. Bessent said, we have taken us off that trajectory and we are putting us back on a sound trajectory. So the key point in this update is that my advice to every country right now, do not retaliate, he said. If you retaliate, there will be escalation. And we have already seen it happening in recent weeks, where Trump was negotiating for a fair trade between American alcoholic products and European alcoholic products, where he threatened to do 200% tariffs on European alcoholic products unless they removed tariffs on US alcoholic products. So the most economically interesting speech I've ever had, analyst says, trying to see what other update we may have missed. Yes, from African side, Trump slapped 30% tariffs on South African goods. Even countries like Madagascar were not spared. He said for the 60% in tariffs that South Africa was imposing on US goods, the US would apply 30% reciprocal tariff on South African goods into the US. These products include products such as textiles and agricultural goods like citrus fruits. He repeated his claim that there are bad things happening in South Africa. Apologies for this. So the United States has become unpredictable, unreliable, and oppressively destroying the African continent, Kabera said. South Africa Trade and Industry Minister Park Stow said South Africa would seek a meeting with US officials to discuss the latest developments. So, of course, this has been far-reaching, basically touching on almost every other industry of trade between the US and the rest of the world. And for some of the countries that got some of the highest tariffs, they are really in deep trouble, and investors are trying to reposition themselves, trying to understand where things might be headed next. So, on the economic calendar front, we don't have much happening. We remember that today is Thursday, 3rd of April. So we'll be having the OPEC JMMC meetings. These are meeting of the oil producing and exporting countries combined together. They control a good percentage of the oil trade, and in this case, in their meetings, they tend to discuss the projections for global GDP and how they are going to meet that demand. And over recent weeks, we have seen them planning to expand oil supply. And as a result, we have seen oil prices moving further back downwards. So later on, we'll be having the unemployment claims from the US, Canadian trade balance, as well as the US trade balance data. This will be happening at 3:30 p.m. So of focus will be the trade balance in the US, which is expected to improve to negative $122.5 billion compared to the previous reading of negative $131.4 billion. So an improvement in the trade balance would mean that the US economy is doing really well, and it would be positive for the dollar. But if the trade balance worsens, then that would be negative for the dollar. So later on at 4:45 p.m., we'll get the final services PMI, and 5 p.m. at the ISM services PMI, both of which are in expansionary territory above 50.0. So if we happen to see a number that is higher than the previous reading or the expected reading, then this would likely mean that services sector has really improved and could be positive for the dollar. On the other hand, a weakness in final services PMI and the ISM services PMI, that would also be negative for the dollar. So of course, we still have a big day tomorrow where we focus on the US non-farm payrolls, where it's expected that the US economy created 137,000 jobs in March, and unemployment rate remained at 4.1%, with wage growth being 0.3% in the same period. So, of course, we know that Trump is the one currently running the markets, basically meaning that actions from Trump are having much bigger impact in the markets compared to data that we are seeing on the economy. But we'll still be focused on the non-farm employment change, where if there's an improvement in the job market sector, then this could bring in some good confidence, especially in stocks. We could be seeing some recovery, and also in the dollar if the job market worsens. So if the job market, if the job market strengthens, we see a positive dollar. But if it worsens, then that could be negative for the dollar, and of course negative for the equities market. So other than that, I don't believe there's any other updates for the day. So try and skim through it. For currencies, since last night, we know that the biggest mover is the Japanese yen, which is up 0.87 to the dollar. The euro has gained, the Swiss franc and the pound. Canadian dollar is slightly moved against the dollar, and Asian pairs have been losing to the dollar. In this case, the New Zealand dollar and the Australian dollar. So the biggest mover this morning is the Japanese yen. And if you look at the entire week, the JPY is still the biggest mover, with only seconded by the pound, which both have gained against the US dollar. So outside of that, I'm trying to see if there's any other update we may have missed. So there's a breaking update on CNBC. Trump will back under pressure if Europe bands together over tariffs, German economy minister. So Dow futures stumble over 1,000 points on fear of Trump's tariffs will spark trade war. Live updates. So almost as all of the top financial markets news websites have been doing live updates, mainly because there has been so many reactions coming in after the announcements yesterday. So for a full list of the tariffs, we know for China, they have one of the highest tariffs. In this case, 34 plus the earlier 20%, they're looking at 54% tariffs. The EU 20%, Vietnam was very much surprised getting 46% tariffs, Taiwan 32, Japan 24, India 26, South Korea 25, Thailand 36, Switzerland 31, Indonesia 32, and Malaysia 24%. So all these tariffs have been pretty heavy on out of countries, and people will be looking at reactions. So some of the reactions we have seen in the market is, for instance, Apple tumbling nearly 5% in Wednesday's extended trading hours. So if you do a quick search for any stock, for instance, if you look at Apple stock, here we're expecting a 7% drop. So at the market open today, we'll be expecting to see much lower valuation. So you go to Microsoft, we are looking at 1.83%. If you go to Tesla, we are looking at 3.87% down from the closing price yesterday. And this, if you look across board, you'll notice that it's having widespread impacts on most of these stocks. And it could lead to a big sell-off at the market open today, and that's later at 4:30 p.m. So outside of that, I'm trying to see if there's any other update we may have missed. So of course, there's out of threatening happening around. China vows to counter Trump's bullying tariffs as global trade war escalates, and a lot of countries are just talking and no action. So I don't know whether they are waiting for the first guy to fight back, first guy to implement countermeasures, but most of the world leaders have been just issuing threats. We are going to retaliate, we are going to do this, but we haven't really seen any action, which means that Trump's tariffs are the key idea to work with when you are looking into the markets today. So that being said, let's jump straight into something else. So in this case, we do some technical analysis and try to understand where the markets might be headed next. So as you can see, this is the Japanese stock market index, the Nikkei 225 index. So from its most recent high to the most recent low this morning. It has been down 21.55%, which basically puts it into bear market territory. So on the forward chart, this is how it looks like. So yesterday, after the announcement by Trump, you can see the big swing that we had here, ranging about 8%. So it was a big sell-off on Japanese equities, but then as we got into the Sydney session, we saw the Nikkei 25 index making some form of recovery, but then the potential for a further sell-off could be playing out today. So we continue observing this range to see if there's a breakout. And if there's a breakout, especially to the lower side, we should be expecting the market to retest the previous low. So as we focus more on stock market indices, we know the UK 100 index or the FTSE 100 index has also been on a bearish momentum for the better part of last month. And now this month, we have really retested last month's low, which implies that there's a very strong chance that the index goes into correction territory, having tested 5%, why not 10%? So from what we are seeing here on the forward chart, there was a big sell-off yesterday, and then the market responded positively this morning, attempting to make a recovery, but then you can see that there is a lot of resistance around this area here. So every time this morning, the index has attempted to break above this area, it's faced with more selling pressure. So perhaps we'll be seeing a continuation of yesterday's move. And this could happen as soon as this London session or even the New York session, which could likely push us to previous lows, somewhere around 84.27. And of course, now when you look at US equity indices, clearly a big sell-off yesterday in the evening, pullback in the morning, but now it seems like the markets are getting some form of momentum, and we could be seeing a continuation as soon as now. So good chance that we see the Nasdaq continuing with the bearish momentum and retesting yesterday's low. And also for the US 30, we're already seeing the continuation play out. So market attempted to make some form of recovery this morning, and then more selling pressure came in. And what we are seeing is the market pushing down lower. So from the daily time frame, it seems like for the Dow, we could be seeing for a level that we witnessed last month. So if you go to the forward time frame, this is the area around 40,847. For the SP 500, it was a very interesting chart. Market basically closing with a gap. So this is where the closing price was. So attempted to close the gap, failed, and now we are looking at a potential continuation, in this case towards the previous low that we had seen here. So as for Bitcoin, it had made a very important recovery all the way up to 88,467. And then after the Trump announcement, there was a big sell-off and it dropped all the way to around, this was 82,166. And now we are looking at a market that is basically recovering. So we know that if we had to divide the market into two phases, one would be an impulse phase when there's a big momentum, and then a consolidation phase. So I would say that Bitcoin has entered some form of consolidation phase as we try to understand whether there will be a continuation of the current price action or whether there will be a reversal. But then for now, it seems like markets are moving sideways. So the dollar index had one of the biggest sell-offs that took us to a new multi-month low of 101. And with the dollar index being this weak, several other currencies have taken advantage, with the euro making a very strong rally against the dollar index. And now we are looking at a very strong bullish momentum to levels that we last saw on the month of October last year for Euro USD. So clearly a very strong continuation in the current momentum. So on the 1 hour chart, it seems almost unidirectional. The market is just pushing higher and higher. So any form of pullback is being taken positively, and the market continues extending the rally. So in this case, more bullish momentum will likely be expected from these pairs. Same case as pound USD, which has only been moving upwards since yesterday. So from the forward charts, from the daily, The last time we saw the pound USD at this high was also in October. So any pullbacks is taken as an opportunity to continue buying. If you look at AUD USD, this one has just broken the most recent high, which is the high of last week, and now might be likely head higher to a completely different level. So if I just remove everything from this chart, let's zoom in and we look at the key levels to observe here. So this was the highest price for USD last week. We just broke that. And now we are moving on to the next level. And in this case, we'll be looking at the highest price of this particular week here. Clearly, 0.63640 could be the next target. So USD JPY, it seems like the yen is the strongest currency in the market right now. So we were projecting that the yen would continue to lose as the US dollar had broken the upper trend line here, pulled back, retested, and continued pushing higher. But now, after the tariffs effect, we are seeing the complete exact opposite. So from the daily time frame, we have just broken below last month's low, and now this implies that the market could be headed much lower than we expected. So in this case, we are looking at levels way lower at around 43.951. So if I had to go with something, I just plotted this line and the market is already pushing lower, then this basically means that there's a good chance that this will have a continuation. So good chance that the USD yen becomes our trade of the day as the market has just broken below a key level support and is seemingly accelerating much lower. So if there's one chance to be looking at the markets, good chance this will be USD JPY pair, where we have seen a lot of the yen strengthening and the dollar weakening. So clearly more volatility is expected. So Nikkei 225 index already covered, and now we go for the main item, which is gold. So we had analyzed these as a triangle, and gold made some volatility at the beginning of the Trump speech, and eventually took a direction and rallied all the way up to 31.67. So clearly this was a range of about 600 pips, and then after we got to a new high, we saw gold pulling back downwards and erasing the gains that it had made earlier this morning. So we literally opened here for the day, went all the way up, and then eventually got down to this area. And it seems like gold is now beginning another form of consolidation, where in the last couple of hours, we haven't seen much of a movement. However, at some point, we'll be expecting to see gold making another break. And when that happens, we'll be very much ready to take advantage of the break. But so far, we haven't seen much happening. So let's continue being vigilant. The key idea is that gold is still on a long-term bullish momentum. So any form of pullback is taken positively as you get very good entry points. So the percentages you see on my chart are representative of the year-to-date performance, where gold last year made 27% returns. And of course, this year, it has already hit 20% before erasing some of the gains. So the current pullback can be taken positively. We'll be looking at signs of buyers entering the market to be looking for more buying opportunities. So oil opened with a gap this morning, attempted to cross the gap, went halfway, and then continued the bearish momentum that started yesterday after the Trump announcement. And now what we are looking at is a very strong bear market in oil. Try and clear the chart. So here we are looking at a market that was literally breaking trend lines. So we had a trend line here. Oil prices broke that trend line and continued moving higher. So we also had this momentum here. So eventually oil prices started creating this sequence of higher lows. So here we had a period of time where we had a breakout towards the upper side. So eventually this channel was broken and the markets changed direction. So remember, this is the 4-hour chart. So this has taken 4 weeks, and now somewhere we have gotten a break. So in the 1-hour time frame, this is how it looks like. So we expected the channel to continue pushing higher, but now we have a clean break which basically implies that we should be looking for further bearish momentum, especially in oil prices. So good chance that we see an extension of the bearish momentum further back downwards towards a price action area of around $71 per barrel. So also, if you look at New Zealand USD, we are seeing a very strong bullish momentum. In this case, the New Zealand dollar gaining against the USD and extending to attempt to get to a previous high. So, of course, the most recent high was at 0.58195, and it seems likely that the market will complete the journey and get to this price action level. So, silver has also been on a dumping spree. So, after trading in a bearish channel for oil, we have seen silver being dumped strongly, and now we are on the verge of retesting a key level support. This is around 32.659. Then once we get to this point, we don't know whether there will be a break or a bounce. So it's basically a key idea to observe what happens to price action of silver once we get to 32.659. So European stocks have had a very big sell-off this morning. So from the 4-hour time frame, notice how they have been extending the bearish momentum. And judging from the most recent high, I believe this was an all-time high in the Euro stocks. The stock market has gone 7%, and it still has about 3% before it gets to correction territory. So judging by the chart here, you can see there's a key level support area at 5,140. So good chance that the market eventually drops to this area. So for the German stock market index, we have also seen something similar. The market hitting new all-time highs recently, and then dropping by 8.28%. And clearly, after the big sell-off yesterday, today has been a day of recovery. So a very strong bounce, which implies that the stocks could even close at a positive today. So clearly, since the market opened today, the German stock market index has been on a positive momentum. But then the overall impact of the Trump's tariffs could be felt today as we get into the New York session. Then we observe the market reaction. So the Spanish IBEX opened with a big gap towards the lower side and has been attempting to close the gap since. So the gap basically started here. I'm trying to find the exact point. So around this area here, and the opening price was all the way down. And since then, the market has been pushing to close the gap, which likely leads to the market getting to the previous high. So for the French stock market index, market opened with a gap, has really attempted to close the gap but failed. And now we are seeing signs of continuation where it's likely that the market could continue having this big sell-off. So from the most recent high to the current price action area, so still within the range of around 7% pullback from recent high. So if we get 3% more sell-off, then that would mean that the market has entered correction territory. So as for USD CAD, we are seeing the dollar losing to the Canadian dollar. Clearly, here we are looking at 4.3% drop from the most recent high. And now a key level support is being tested. So the support area here is the lowest price here. The market jumped right into it, but then didn't continue. Now we are seeing some form of reversal from this area here. But nevertheless, we continue observing this area to see if there's signs of continuation or consolidation around the area, 1.41506. So on Chinese equity indices, the Hang Seng stock market index had a big sell-off yesterday. And if you look at the most recent high in the Hang Seng index, you'll notice that we were down about 9.98%. So it basically puts it into correction territory. And if you notice from the big sell-off last midnight, the market responded immediately and now has been moving sideways, which basically screams of a market that is basically consolidating. So this means that this particular market hasn't been moving up and down. Has been moving up and down since midnight. but it hasn't made any meaningful progress, implying that the market is just moving sideways. So we'll be waiting for an eventual break, which would give us a direction. And of course, for the Chinese stock market index, the China A50 index, all we are seeing is the yesterday's volatility, where there was a massive panic after Trump's speech. Then the markets recovered immediately, and it's more like a reversal to mean, which basically implies that the Chinese supported their market, so they haven't had a big impact from Trump's policies. So clearly, this has been the overall momentum in the China A50 stock market index, then still on a bearish momentum since the recent highs. So clearly, we are seeing, sorry for that, the Chinese stock market index being pretty resilient compared to the US and European counterparts. So lastly, I'll be checking on the Chinese yuan, trying to find the individual tracker. So let's get to it. So this was the momentum with the Chinese yuan. The US dollar made a lot of gains on the Chinese yuan, getting to 7.36 price action level. I don't think we have seen that recently. The last time we saw that price action level was all the way back in February the 3rd this year. So now, after the market hit that level, we know that the Chinese intervened, or the Chinese government may have intervened. And now we are seeing the Chinese yuan make an impressive recovery. So similar to what we saw happening with the Chinese equities, we could be seeing the Chinese yuan make an impressive recovery from the dollar and potentially get to the previous highs and previous levels. And this will most likely happen as a result of intervention in the currency market. So that's it for the day. Checking on the questions that you guys may have raised. So good morning and shout out to Maureen for being the first to join and comment. You can see Charles Palmer, Jay, Dennis Kemboi, Ronald Hilary, Movado. Thank you guys for joining. Dennis Mwangi, Zefden, Wilta, Marcelina Mwangi. Thank you guys for joining. Francis Koech, Lewis Mutembei, J Squad. So one question here: why did the tariff come after market close? What will happen at the market open today? So I don't know. Maybe Trump didn't want to impact the markets as much, so he waited for the market to close in order for him to make the announcement. So what happens at the market open today? So the markets are still processing how deep these particular sanctions go. So while there's still uncertainty, I expect to see more bullishness in gold. But then we also expect to see more sell-off in global equities, especially for emerging markets that were slapped with heavy tariffs. So for instance, markets like India, Vietnam could be facing big sell-off at the market open today. Same thing as South Africa, China. So at market open, there is definitely going to be volatility. Gary Patrick, can we say that the dollar is going to trade as the weakest currency going forward, or we should anticipate a recovery during this period? So yes, I expect to see that. So mainly because we are seeing the bond markets reacting negatively to this. So bond yields have really come down after the announcement. So clearly we expect the US dollar to continue weakening in the session. Also, I respond to J Squad. I tend to see that the reaction to the tariffs is already in play. Clearly, we should be expecting more movement. Pick an impulse move. Patrick, an impulse move is always accompanied by a correction. My 2 cents, a correction before continuation of the short on USD. As the Rufus always puts it on your due diligence. So clearly, we should be expecting at least a breather, the same way we are seeing it with the Nasdaq, the Dow Jones, the SP 500. We've all seen it happen. A big sell-off happens the following day. The market makes some recovery and then continuation. So today we are testing the theory on the range. So the range is already in play here. So the range is a sideways momentum in the markets. So clearly, if there's a break here, then we should be expecting to see a continuation of the same. So anything on gold? So we already talked about gold. We are waiting for the market open to see whether there will be a continuation on gold. And of course, it's the most likely outcome. So while we are not sure what might happen with specific equities markets, for gold, the reaction is almost the easiest to project, that we'll be expecting to see gold continue with the bullish momentum. So after erasing the gains that we had seen in the earlier morning, now we are still very close to all-time highs for gold. Remember, a new all-time high was formed this morning. Yesterday, we didn't have a new all-time high, but the prior day, that was Tuesday, we had a new all-time high. So these pullbacks are usually very welcome, and we start looking for signs that buyers are coming back in. So once we see those signs, then that marks our entry point for a continuation of the bullish momentum in gold. So that's it for the day. Also, remember to check out the latest episode of the Bullish Banter podcast. It's available on FX Pesa YouTube as well as all other podcast platforms. So if you don't have a trading account, make sure to check out the links in the description below. If you're watching this from X, check out the FX Pesa official handle, and these will basically provide you the links to more content, including our education programs, as well as account registration and how you may reach us. So that's it for the day. Thank you very much, everyone. And one more announcement. I believe we have a trade talk in Tanzania. Hello, Prudence.
Hello, Rufus. Thank you so much for the markets insights. And I would like to tell people that we have a lot of initiatives that are going on here at FX Pesa. We have the physical sessions going on in Tanzania every day, Monday to Friday. But also, all those people who are tuning in from Uganda, we also have physical sessions going on every day from Monday to Friday. But also, we have a lot of events going on. Let's say, for example, here in Tanzania, we have Trade Talk. Also in Uganda, we have Trade Talk. So this is the place where you can get the insights and use those insights to make the informed trading decisions. So thank you, Rufus, for this.
Awesome. So thank you, everyone, and I hope you have a fruitful day. Remember, the New York session is expected to be volatile today, so take all the opportunities, but also take them with a pinch of salt. So be careful about the volatility so you don't lose money. Thank you, everyone. Enjoy your day.